Welcome to Recovery Report Live. I'm Dan Odess, president of GlobalPro, where we manage risk to recovery, and we've managed more than $1 billion in recovery, and we've helped thousands of community associations and businesses place insurance year-round for over 10 years now. Now, there's a lot going on that's happening in the legislation in Florida. There's a lot of changes that happened last year. There's more to come. We're going to get into that topic with our guests when we bring them on from CEOMC, an incredible organization that if you're a community association manager, a board member, and you don't know what CEOMC is, I highly encourage you to check them out, be a part of the action that's going on, the changes that are being made that are impacting you the most. That's who Josh and Mark, that's what they do. That's what they've pioneered. They pioneered this group, CEOMC, to take on these tough issues for community associations. But before we get there, I want to talk to you a little bit about what's going on in our first quarter of this year. GlobalPro has been hitting the ground running with all kinds of initiatives, whether it's helping the community, being out there, being a solution to some of the issues that are plaguing our community, from homelessness to dealing with the Hurricane Ian fallout. We're still dealing and fielding many calls from policyholders that have not gotten paid, that are still sitting with underpaid claims, delayed and denied losses. It's quite a situation. We talked late last year, about some of the statistics, about the enormous and immense issues that we are dealing with for policyholders, where insurance companies are going out and just shutting down claims before they even come out to the properties to investigate it. We saw in this last special session where you had tons of testimony on behalf of policyholders talking about doctored reports and fraud on the behalf of insurance companies. It all seemed to fell on deaf ears, and sadly, we had some bad consumer legislation that got passed. We don't see any real changes in the market. It's still a tough market. We're still seeing less insurance for more money. Again, these issues are plaguing the industry, and we're hoping that this session, people wake up a little bit to the reality and make the changes that are necessary. But we want to be part of the solution. That's why we do this show here every single week on the Recovery Report Live. I have on two tremendous guests that are going to provide awesome insight to what's going on. Now, and before I bring them on, again, go check out CEOMC. We are members of it. We are there on the front lines with Mark and Josh, doing what we can for community associations, providing a solution. It's an incredible organization that is doing awesome fun events as well. They have dinners and engagements, as well as the really important stuff up in Tallahassee, where they're boots on the ground, working with legislators on behalf of community associations. So I want to go ahead and bring on our guest this week. Josh, thank you so much for joining. I know Mark's having some technical issues. Maybe he can sort them out and join us as well. Thank you so much for joining us this year, 2023. So what's going on in CEOMC?
Hey, Dan, thank you so much for having me. Happy to be back on Recovery Report Live. We are getting kicked off here with the 2023 legislative session in Tallahassee. We're currently in our third of 7 committee weeks that they're going to have before everything kicks off on March the 7th. Things at CEOMC are going great. Again, my name is Josh Burkett. I am one of the lobbyists for chief executive officers of management companies. We represent about 18,000 community association managers across the state and 6 million doors here for people living in common interest ownership, from HOAs to condos. And, as you mentioned in your monologue, Dan, we have been quite busy up here in Tallahassee the last couple of years with some of the changes they've produced relating to insurance, the Surfside collapse, building inspections, structural integrity reserve studies, and that pace isn't changing this year from what we're seeing up here in Tallahassee.
A lot of things going on. So Josh, I want to take a look back first, give our listeners some context to our conversation about what to expect. What changes did you see, just in summary, last year, and the results of those changes, positive or negative?
Yeah, absolutely, Dan. So, last year, they really tackled 2 big issues that community associations have been facing. One, as you mentioned, being insurance through a special session in May. And actually, during that same special session, they passed legislation aiming to help associations better fund their reserves, inspect their buildings, following tragically what happened at Champlain Towers and Surfside. There was a spotlight put on how many condo associations do not properly reserve for things like deferred maintenance. And, Florida was one of the only states in the country that allowed owners to have the ability to waive their uh, ability to fund reserves. They have two different budgets presented to them, one with fully funded reserves and the other was less or no funding for reserves. And Florida statutes afforded owners that ability to waive those reserve requirements. And the legislature came in a special session and actually took that ability away beginning January 1st of 2025. And the whole idea behind this was to make condominiums safer, prevent buildings from falling down, as we saw in Champlain. But the other side of that is going to be a cost increase. And that actually pairs with what I mentioned before about the special session relating to insurance. I mean, as most of your listeners know, insurance rates have skyrocketed across the state over the last couple of years. And the legislature has tried in 5 or 6 different fashions, going back to 2017, to do different things relating to attorney's fees, assignment of benefits, trying to find a way to incentivize more private carriers to come into the marketplace, and also mainly to depopulate Citizens. Citizens is Florida's state-run insurance program, and over the last 10 years, the amount of policies that have come into Citizens has reached critical mass. And so the legislature has now looked at different ways to depopulate Citizens, and some of that coming in the most recent special session, to where now if these condominium communities have a policy from a private carrier within 20% of what Citizens is offering them, Citizens is going to kick them out. I mean, the goal of this is to create competition in the marketplace, depopulate Citizens, curb litigation. That's what was the goal and aim of the bill passed during special session in May. But, we haven't really seen the positive effects of that going forward. And really what condominium associations are facing is less coverage at a higher cost.
Yeah, and I think that's one of the biggest issues. And we had an opportunity just offline to talk about our perspective at GlobalPro being, policyholder advocates as it relates to some of that legislation. While it was billed as this assistance to create this competitive market, such as curbing attorney's fees or the AOB issues, the irony is that it didn't. And while it was said to be the answer that the insurance industry was looking for in order to attract them to that market, it didn't. It didn't change much of anything. It didn't make it any more attractive to these insurance companies. In fact, I'm going through several renewals right now with clients, and I can tell you right now, less coverage, more cost is just across the board. These are associations that might have had one claim over the last 5 years or no claims. They're still seeing an increased cost of their insurance. Brokers peddling this idea that if you hire a public adjuster or if you make a claim or file a lawsuit, you're not marketable. Again, not true. We're seeing a lot of different things on the insurance side of stuff where the story that was told and the bills that were passed are not equating to the results and the expectations that we were led to believe they would bring. So now, as it relates to the reserves and funding the reserves, it's a really important issue for a lot of our clients when they're placing insurance and looking at those reserve studies. I was encouraged, and I know you were, Josh, about this need to reserve and where people can't waive the reserves to an extent, right? Did you today are you seeing a better? Are you hearing from your constituents, from your members? Are you hearing that the reserve studies are going along better, or there's more responsive boards? How was that received, and where do you see the results of that? Are they good or bad or indifferent?
Well, Dan, I think, the one thing that we've heard across the board is an increase in costs for these community associations. And the 30,000 foot view of what was done relating to Surfside passed in Senate Bill 4D in the special session from the airplane view. Yes, associations should reserve their funds. Yes, they should get a reserve study. Yes, they should have their building inspected. Where it went awry was down at the ground level in the details. Most of my members, hearing from their boards and their unit owners, is they're just extremely confused the way the legislation was written. They're not entirely sure what a structural integrity reserve study is. It seems to be a combination of a engineering report and a financial tool. And most of our members are just are concerned with, are there going to be enough engineers, architects to produce these reports by the deadline of January 1st, 2025? Because there are some, there's a sledgehammer hanging over a lot of these boards to where if these reports aren't done in a timely manner, it's actually a breach of fiduciary duty by the board members. And it's unclear, if they were to reach out to an engineering firm and have them come out to do a milestone inspections and a structural integrity reserve study, and they're backlogged, and they say, well, we can get to you in March of 25. Have they done their due diligence, or is it that they need to have these reports done by that date? And then the second thing, looking at with funding of reserves and tying it back into insurance, some good actor associations who have done reserve studies, kept up with deferred maintenance, they've updated these year after year, and they might talk to a roofing company and tell them that, yeah, your roof has another 10 years left. But then they get a bill from the insurance company saying, if you don't replace your roof this year, we're going to drop you from your coverage. And again, that results in special assessments on these unit owners who have been trying to do the right thing for decades with reserving money, but yet still they're getting this extra bill in the mail. And that affects their reserve funding. Some of these associations too that have been funding less reserves or not funding reserves at all. I mean, we're seeing, for example, I have a community in the Pinellas County area that has about $200,000 in the bank, but when this bill goes into effect, they need to have about $1.7 million. I mean, that's an insane amount of money that the average Floridian just doesn't have laying around. And I think that it's important that the legislature understand that there's good ideas, and then there's the reality of what the condo market can actually handle. And that unless they go back in, really look at this and maybe set up some type of a glide path or some way for these associations to get made whole, taking into account what we're seeing in our country, even outside of insurance, just inflation, the cost of things, like people don't have as much disposable income as they did in years past. And there's a lot of seniors on fixed living that make up a good portion of Florida's population. And I think that it's important for your listeners and for community association residents to reach out to their legislators and make their voice heard.
Now, I was going to mention a couple of things you mentioned, and they're great points, which is, I think from the insurance company's perspective, this idea that I can't get sued, you can't hire a public adjuster, you can't assign your rates over to a contractor, it's a free market for them, and now we're all running here and create competition. Well, that's been the trend, right? And it hasn't resulted in a more competitive market, a better priced insurance, or better products, or anything like that. It's actually the opposite's true. So, we're hopeful on the advocacy side that the other shoe will fall and say, well, you ran this campaign saying all of that and that was going to happen, but the reality of it is that the other shoe didn't fall. We didn't see a more competitive market. And to your point, where you're talking about an association that, the roofer comes out and says, yeah, your roof's got another 10 years, and the insurance company say, oh, that's not good enough for us. So, to what end do we need to do these things? And one of the things that we saw tragically after Hurricane Ian are communities with that are overwhelmingly fixed income and that are dealing with this legislation from 4D that you mentioned. And now they have a major catastrophic loss, and they were already planning a different project, and now they're looking at their massive deductibles. They have 5% deductibles. They're going to have to come up with millions of dollars. And then on top of that, layer on top the cost of doing all these reserve studies, infrastructure work, none of that which is covered by insurance, et cetera, et cetera. It's really kind of, I think, in a lot of ways, snowballing and snowballing out of control. And again, the other shoe's not falling. We're not seeing the positive impacts of these things, because I think while the legislator has operated in a large part based on theories, I think Pizzo, after the last session, after the first session last year, asked, where is the data and reporting that was required from 2020 and 2021 in those bills? And the reaction was, oh, we don't know yet until 2023. And here we are in 2023. going through several meetings, and we still don't have the data and information. I'm not sure we're going to see it on the insurance side of it. But again, I think there's just a lack of accountability, because even if you have the most advantageous market for insurance companies, what we've clearly see is that the insurance companies still don't demonstrate any interest in changing, because they're not being required to do it, and the reporting standards haven't changed on those things. So, and I think one of the things that changes for community association was reporting standards. And it's funny thing is I did have a chance to watch our recording from last year when we did this to talk about those sessions. And one of the things we mentioned was whether or not we're going to even actually have board members. Is anyone actually going to be interested to being a board member? Now, I will actually say that the other shoe fell on that. I actually saw a rush to be a board member. We had more people interested in being decision makers. But I think, to your point, and something we also had an opportunity to talk about, is that the professionals that are supposed to be providing the reports are confused by this. The board members that want to be decision makers aren't sure what they're actually supposed to be doing. The cost of doing it has actually risen. I've seen that for insurance not insurance. Sorry, I got insurance on my mind. All I'm talking about is changing insurance. The actual engineers and contractors that are providing these reports, I've seen an increased cost on them because the demand is so high. But I've also seen a change in the engineers. You're seeing them rebrand as consulting companies, and include a lot of other forms in there of disclaiming their liability or obligations to the opinions that they may be delivering or providing. And are you seeing this, hearing about this, and is there going to be something that happens to make a change for that? Because I spent all this money to get all these reports to do all these studies, but if an engineer's not going to stand behind their opinions, what does it actually really mean?
Well, I think you bring up a great point, Dan. I mean, the liability that goes into these brand new phase 1 and phase 2 milestone inspection reports. So the phase 1 is a visual inspection of the property that an engineer needs to sign and seal on their license. But what's a little unclear in some of the legislation is, visually inspecting a property and saying that it's safe, that's a stretch for some engineers. I don't know how you walk through a building and visually inspect the electrical system or the plumbing or the foundation or load-bearing wall without going into phase 2, which is much more expensive than a phase 1. We've heard anecdotally that these phase 1 inspections are anywhere from $5,000 to $20,000, and I haven't even seen hard numbers on what a phase 2 inspection looks like. And so, there's concern from the community association standpoint to where, if you bring out an engineer and you pay him $20,000 for a phase 1, is it really going to stop there? What are they exactly looking at? And most importantly, how many engineers and architects are there out there that are able to do this work? And more importantly, willing? We could have an abundance of engineers, but how many of them are willing to put their name and license on the line to say that these buildings are structurally sound? And with this, deadline hanging over their heads, it's going to be difficult for these community associations to comply with the law.
Yeah, no, and you saw there's a sheer number of community associations that were impacted by Hurricane Ian at the end of last year. And one of the conversations I've had with several of them is, while the insurance companies came back with partial repair protocols where we're actually claiming the full cost replacement of them, one of the confusing pieces of legislation that was passed last year was this idea, the sliding scale, if you will, lack of a better kind of term or word, if you will, and how they owe or going to pay for replacement or repairs of roofs. And the question that was asked is, okay, well, if you only owe me to repair the roof, and I repair the roof, then how old is my roof? Because then that goes into the calculation of the premium in the subsequent years as they're getting their renewals. And I believe it was Senator Boyd came back and said, well, we'll have to fix that or figure that out. And there's some things we need to work on. So again, we haven't seen anything proposed that clarifies or corrects any of that issue on the insurance side of stuff. But I know that it goes into the reserve studies. And again, these are all kind of like trickle down or domino effect or whatever cliche statement you want to use for it. They're all intertwined and related in some way. So now we're talking a lot about the fallout from last year and some of the issues, and we can keep going this way. I know there's a lot of things that we could talk about, but what do you see as solutions, and what do you think is going to be proposed this upcoming session that may try to fix some of the problems or confusion or issues that we saw from the last few sessions?
So, one thing, Dan, that we're definitely going to look at is a cleanup bill to the Surfside legislation, Senate Bill 4D, that was passed during the May special session. In conversations we've had with House and Senate leadership and legislators, they're hearing from their communities about the cost increases, the confusion. And so, we've been actively working with stakeholders to try to come up with a few cleanup ideas. We've actually submitted some language into bill drafting, but there also are those individuals in the legislature who say that, well, the law hasn't been in effect long enough. We don't really know where the issues are, and I think that that's important for your listeners and for the community associations to make their voice heard. There's a finite timeline, there's a deadline that these things need to be done, and these associations need to have direction from the legislature that propose most of these changes, because we all know that budgeting for 2024, which is going to include many of these costs, is going to be happening in as early as September of this year. And the legislature is only in session March through May, and unless they were to come back for some type of special, this is the session that they need the clarity. The other thing that I think that we're going to see is potentially more changes to the insurance legislation that was passed during the December special session. In that special session, there was tons of public testimony, but there were absolutely zero amendments or changes made to that bill. And that's not out of the ordinary for a special session. Normally that stuff is negotiated before they even go in, and they kind of have a game plan, an idea, and you're not going to be able to change the weather during a special session. But as you mentioned, Senator Boyd, who was one of the sponsors of the Senate bill, and Senator Boyd understands insurance very well with his background, and he mentioned that this is something they need to take a look at. The House Chairman, Chairman Leak, who ran the legislation on the House side, in committee, he also mentioned that some of the issues brought up in testimony will need to be addressed. But again, special session has finite time limits that the work needs to be done. And now going into basically until May 5th, it'll have some time, and I wouldn't be surprised if there's something introduced to correct some of the issues you brought up. And another one that comes to the top of my mind, in the legislation, it seems to suggest that if you live on the 32nd floor of a condominium building and you're in Citizens, you need to get flood insurance. So that's something that it's an unintended consequence. And when you write legislation, you can never write it correctly. There's always things can be changed and loopholes. That's why the legislature goes in every year. When you pass major pieces of legislation, you never get it right the first time. There has to be a cleanup. There has to be time to take more input from stakeholders. That's why they have committee meetings. That's the idea of the process. So, it might take 6 or 7 iterations, but it's something that needs to be done.
Yeah, no, there definitely needs to be a little more insight. And I just what's confusing for me as obviously a policyholder advocate is again, something I've mentioned many of times, that if you actually look at the governor's order for the special session, it's to address an issue with the homeowners market. If you look at the earliest session from last year, but if you actually look at the reform the bills that were passed, there's broad sweeping impacts for all lines of insurance, including the commercial lines, which is what the community association policies are sold on, which lends itself to a tremendous amount of confusion, and just from the get-go, right? Just the whole setup to it. The expectation going into it is that we're going to address an issue with the homeowners market. Next thing you know, we're addressing all lines of insurance, and it's like the issue in the support and the data that they're using which I have an amazing amount of issues with, to support the bills that they're proposing and then passing, don't align. And I think there's a lot of disconnect at the legislative level between what actually is being sold to community associations and the changes that they're agreeing with or promoting or voting for, and their downstream impact that they have on community associations separate from homeowners. I just don't think that there's just a real good understanding, and insurance is a very complicated issue, just like reserve studies and engineering and the phase one, the phase twos. There's a lot to clean up. I just don't know, having had the experience of working the floor in Tallahassee and going to the meetings and doing all those things, which you do on a daily basis. I don't know that everything can get done, obviously, and I don't think that people should falsely have an expectation that there's going to be a silver bullet or that this is all going to get fixed in this next session. You need to be patient. You need to invest in organizations like CEOMC and the great people like you, Josh, and Mark, because you have a long view of this, right? You know that it takes time, takes a lot of energy, and it takes the support of community associations and managers and unit owners to be able to fund those efforts, and that time and effort. So as I did earlier in this broadcast, I encourage all of our listeners to check out CEOMC. Josh, what's the latest? Where can our listeners go to find out more information about all the things you guys are doing?
Yeah, Dan, and before I get into that, one thing I did want to harp on that you mentioned, there is no silver bullet,
No.
especially when it comes to insurance. And if you look at the last couple of years, it's been a chip away effect.
Yep.
First they did a little bit of AOB reform. They did some attorney costs reform, a little here, a little there, and now we got into a situation in December to where, the legislature really gave the insurance companies everything they've been asking for the last couple of years. And that old adage of be careful what you wish for. They really gave them exactly what they've been asking for, and the idea is that it's going to take time, but the idea would be in about 18 to 24 months, we're going to see a robust private insurance market. And I think, again, on that long view of things, if that happens, great, then it worked out. But if not, I think, we might see the fact that the pendulum was for years probably more in favor of easier litigation, and they have now taken that pendulum and swung it all the way in the other direction. And I think unless there's some serious changes to the marketplace, more competition, rates starting to go down, able to get coverage, I think that is going to start to tick back the other way, because there really isn't that much of an excuse right now from the insurance carrier's standpoint about why rates aren't going to stabilize. And hurricanes isn't an excuse. This is Florida. We have a hurricane season every single year. These rates that they put together for homeowners are based on a math problem, and it needs to be factored in. But as litigation is allegedly going to curb, rates need to go down, and these costs eventually need to be passed on to the homeowners and the policyholders, not carried in the insurance company's pocket.
Yep.
But to answer your question, though, please visit www.ceomcfl.com. That is our website. Again, we are a trade association of property management companies representing 18,000 community associations and 6 million Florida homeowners. We have our website updates you on advocacy work that we're doing, different events we're doing around the state. We'd love for you to check it out and join. And also, most importantly, get involved. If you're a board member, if you're a community association resident, reach out to your state senator, your state representative. This is the most important part. We can do all kinds of things up in Tallahassee, having meetings with legislators, working on policy. But what really moves the needle is voter engagement. This is all about grassroots, letting the legislature know what is really happening every single day to regular Floridians. And I cannot stress that enough going into this session. There's all kinds of problems that people complain about, but this is an extremely important set of months for those who live in community associations, and we need all the help we can get.
That's great, Josh. Thanks so much. Sad we couldn't have Mark on today, but I know you do carry a big torch for CEOMC and a massive advocate for community associations. It's great to have you on. It's great to talk to you about these really important issues, and I look forward to having you back on after this upcoming session. We're going to have to do this again because I'm interested to see what they fix or what comes out of it. But also, I think what's important is what they don't fix, but what is the sentiment? So what are we expecting? What's the next steps? Because again, for viewers out there, listeners that don't have the experience and don't have the opportunity to get to Tallahassee to watch the process and to be a part of it, as Josh said, reach out to you can do that from the comfort of your own home or office. Believe me, they do read it. They do look at these things. I've been shocked and surprised going into a meeting how much information the senator or representative had or was given prior to my meeting with them. So they do educate themselves on what their constituents said. So if you do write, if you do call, whether they agree with you or not, that's something entirely different. But I am surprised by how much commitment that a lot of these lawmakers do make to listening to as many people as they can. But again, are they going to make the change that you agree with or whatever else? That's to be seen. There's a lot of stuff at stake and a lot of information for them because while we're talking about community association issues and insurance, they're also looking at many other bills and laws and
3,000
special
bills.
interest groups up there. So it's a lot for them to take in, and they got to do all that in a jam-packed amount of time. So just understand the process.
Absolutely. And Dan, I would love to come back on and hopefully Mark can join us. And even in the interim, one thing that I would love to do is actually share with you and your team, as these bills do get filed, I would love to share with you and your team committee lists, contact information that you can put out to your members that contain email addresses, phone numbers, and that is, they read it. As you said, they listen. It is so important for them to hear from the people who put them there in office about what's going on. And so, I look forward actually to working with your team during this session to kind of get some of this information out to your listeners.
No, awesome. Well, definitely give us that information. I'd love to make it available to us. We're going to make sure that all of CEOMC's information is right down in the description on all our social media. So, Josh, thank you so much again for joining us, and hopefully we get you and Mark back on mid-session, and then at the end of it to kind of summarize where we're at and where we're headed. This has been awesome. Thanks so much, Josh.
Yeah, thank you, Dan. Thanks for everything that GlobalPro is doing for the industry. We really appreciate it.
Well, we always want to be a beacon of hope, and as well as making sure that people have the information they can use, and that's what this show has always been about. We'll be in touch here soon, Josh. Thank you so much again.
Yes, sir.
All right, guys, great topic, really important information. We want to make sure that you continue to have that information you can use because this session is, to me, as if you're a stakeholder in a community association or a business, you should be paying close attention to this if you have those business or community associations located in Florida. If you're not located in Florida, I do still think you should be paying very close attention because, as we mentioned many times before in other shows, Florida tends to be a bellwether state where other states and other legislators look to see what changes are being made in Florida and whether or not they can make those same changes in their states for their constituents and their people. So I'm interested to see where this heads. There's a lot to talk about. I'm interested to see maybe do we get the information, the facts to support the legislation that was passed in the last few special sessions. I have my doubts because, like I've said many of times, you don't pay for premiums with percentages. We pay with dollars. So show me the dollars. Show me how the litigation that the legislation has alleged has driven insurance companies out of the market and driven our cost of insurance up and stripped coverage out of our policies. Prove to me that the cost of litigation has actually done that because there is yet to be a smidgen of proof. They give a couple examples here and there. It's funny, though, when they give you the examples and they give you the data, that's publicly reported stuff because there was a jury verdict and then a judge awarding stuff, meaning that the plaintiff proved that the insurance company didn't do what they were supposed to do, didn't indemnify the insured, and therefore needs to pay not only for the damages plus the attorney's fees. What's wrong with that scenario? I've yet to see or read an actual credible take on that could show me that what is going on the litigation side is wrong. Show me that it's wrong. Don't just talk to me about the increased amount of litigation. Show me the dollars. Show me how this hurts us as consumers, hurting our pockets. I believe it's hurting the insurance companies' pockets because they're doing things they shouldn't be doing. I believe that changes were made that shouldn't have been made. I believe that we aren't going to see the other shoe fall and we're going to see a more competitive market and lower rates. I don't believe that's going to happen. If history proves anything, it will prove that the insurance companies won't be more generous with coverage. They won't be more affordable options, and there won't be more insurance companies in this market. I don't see it happening. I don't see people on the insurance company side talking about it. But that's just one issue that we're trying to address here. And we want to make sure that you have information you use. That's why we bring on experts like Josh and Mark to talk about these really important things, because there's just more than insurance. While certainly one thing impacts another when we talk about reserve studies and all this other stuff, that's why it's so important for you to make sure that you continue to tune in every single week right here on the Recovery Report Live. We're going to bring Mark back on mid-session as he offered, as well as the end of the session, to talk about what was accomplished and what should we expect going forward. So again, we'll see you same time, same place, right here on the Recovery Report Live. And if you haven't already, like us, follow us, and subscribe to all of our social media. So make sure you get those updates when we go live right here on the Recovery Report Live.